Is my mic working? Is it? Testing, testing. 1, 2, 1, 2, 1, 2, 2. Amazon, amzn. Another beast that took a hard drop. But what type of damage did that do? I don't like these big red candles. So we'll always start with the monthly candle chart. Going back, see those huge drops, 10, 20, 30%. They start happening when you start going away from the 12-month moving average. But right now, that wasn't too hard to drop. Oh. Still. Went back down below 12-month moving average. You need some time to digest. Sideways pattern. Dangerous. Because now your price action is below. But with all those wicks right here, what I would have told you back in the days, I would have said, oh, look, you need a monthly candle close. Because I'm pretty sure there were singles on the weekly right here. That closes below those breakdown lines, below that 300 level. And you can say, oh, time to short. Well, nah. Test. Buyers coming in, creating wicks. And what happened? Reversal, close above a horizontal breakout line. And then you are not trapped because you would have waited for those monthly candle closes. And now you have a monthly candle close above a horizontal breakout line. And off you go, guys. All right, look at that. Going up. And this is the big candle. We're going to have to zoom in on the weekly, see how this looks like. Barely close above the 12-month moving average. And starting to go upwards. Seems to be a bounce right here, but this is damage. This is technically damage. It's overhead resistance. So all these people that bought up here, they saw the price action go back down here. And if they don't want to hold, if they're not strong hands, that means hands that don't have sell stops, hands that are strong, that they're just going to keep it for years and years and years. If they're not those, then a lot of buyers, they might, as soon as the price action starts going back up, oh, okay, I'm getting close to my break even. I'm selling, down pressure. Oh, I'm getting close to my selling, down pressure. Oh, and all these people that buy here, oh, I'm so happy. I'm broke even. I'm happy. I'm selling. Then after that, that's how you start defining the next area of resistance. And then you have a nice super duper pattern. So what happens here, you could imagine the 12-month moving average starting to go like that. And if it goes back down, and then you go, that's a scenario that could happen. But the inverse is also possible, is if there's enough buyers to overcome and over time, sideways move, overcome, chew all this overhead resistance that was created by the people that bought up here. Over time, stage 3. Especially if you close below the 12-month moving average. And after that, you got to get ready for either breakout, continuation breakout, or... Whoa! What? There you go. Bring that back here. All right. Just like that. You could have another arrow going down here. Measured move. And then you could have a breakdown here. Breakdown will bring you where back to... Here's just some 2 months previous resistance turn support. Or you're right above this more important 1, 2, 3, 4, 5 months sideways move right here. Close to the 12-month moving average. Could bring you back down here. But if you get a close below 1600, 1590, 1592... pretty clear way all the way back down to this target here, 1150. And the opposite, well, if the price action starts gyrating here, closing above the 2000 mark, 2024 mark, then you have an implied measure move all the way to 2450. Ooh, all right. But I don't like this. When I see big red candles, that's a warning sign. If I just be chewing up slowly, ninja-like, not going too far away from the 12-month moving average, I'd say, okay, sideways move, consolidation, close to 12-month moving average, and then exploding. But when you start seeing volatility like that, you could look at a whole bunch of charts. You're going to hit hard until the market decides where it wants to go. But definitely a sign of a distribution here. All right. So the monthly right now, technically still an uptrend. You are bouncing off here. But the warning signs is huge red candle going down. If it wouldn't be for that, you could say this is a good risk reward entry for continuation bounce off the 12-month moving average. Zoom in on the weekly. Okay, look at that. Let's remove all this stuff. Move all drawing tools. What do we have here? And yeah, there's this is the Mansfield routes of strength that I've been using. There is another one that's out from OSTAP, and man, the guys just did a great job doing it. Open source compared to the one I've been using. You could actually see the code. You could actually I'm gonna have to go through that. I'm gonna have fun with that indicator. Oh, what else is different from the route? Here you could more customization right here. You could play with those periods. You could change here the index like I can with the Mansfield strength indicator I was using. You could use a weighted MA, simple MA, exponential MA. Lots of customization possible. Play with the colors, the thickness of the lines. Honestly, this is a great step up because now we could actually build on that code. So if ever I had some ideas that I wanted to add, let's say I want to be out of the cloud. So now from stage analysis, from user trader, I got Stan Weinstein says no overhead resistance close by. Well, using or support underneath, I'm using the Ichimoku cloud to define that. And the green overlay could actually be only green if you're above the Ichimoku cloud. And to get that extra verification through this indicator of more weight, more evidence that you're in a strong stage 4 or strong stage 2. But I think this is the basis going future. Lots and lots of potential using that Pine editor on TradingView. I'm going to close it for now until I have time to play with it. Okay, Amazon, weekly. Stage 2, sideways move. See that volume? Usually I look at the volume and then I could pretty much, when you see twice average volume, pretty much there's an explosion above a horizontal breakout line. That was a great stage 2 continuation right here. Love it. Up and up and up, going away from the 30-week average, hitting some weekly defined resistance here. Broke down from that top pattern, that 4-week pattern, closed below 30-week average. Not good. And that is why, even if you're outperforming the SPX, but you're less and less outperforming it, you have the gray zone here because you're under the 3-week average. Stan Weinstein says, there's no reason to be under here. If you're under the 30-week average, is the trend has slowed down. You're not in a strong stage 2 anymore. You're entering stage 3, and why stick around weeks and weeks and weeks for all this to be digested? See all these red candles? This is a strong one here. This is all these 4 candles. That's all overhead resistance that has to be chewed. Now you have a hammer here, so this could probably be an it bounce off the 12-month moving average as we saw on the monthly. I had it here. This is my weekly defined support. So we found some support here, but you're still below 30-week average. Other warning signs. Remember, pull back, go back up. Traders way sell stop here. Investors here. Pull back, go back up. Sell stop here. Pull back, go back up. Sell stop here. Up, pull back here. Back up here. Even you could have your sell stop here. You could even be exited hitting these candles here. That's some warning signs to get out. What else did we have? San Weinstein valid trend line is 4 points. Break on the 4th. You're out for half your position. 1, 2, 3, 4, 5. Break here. So trend line violation, that means that you don't have the same inclination of a stage 2 advance. Warning sign to get out. Lower lows. That means you're triggering out your sell stops that you put below the previous low. Warning sign to get out. And 30-week average, as soon as you have price action under, it's going to start dragging it down. You don't want to be there. And the longer it stays below, the more you're in a danger of that stage 3 becoming a stage 4. It all adds up. And after that, you're in a stage 4. You don't know what the hell happened. And you should be shorting instead of being emotional and just praying that Amazon kicks back up, guys. So if ever you enter too late in the advance, well, it's time to cut your losses, because if you have no more capital to trade, your chances of success are 0. All right, what else do I see? So we're not quite there yet. So this is more entering stage 3 on the weekly. On the monthly, we saw it's barely hanging on, but you have that weekly pressure right here. And until the price action defines more of its support, until it goes back above the 30-week average and above all the way back to 2000. So I would actually put an alert right here. Can I do an alert? Add alert. Create. So I have my alert up here. Until that's triggered, for me, there's no... Oh, it shows me all my alerts. There is no stage 2 continuation. I should not be in that stock. I need it to digest all this overhead resistance. And if there's not enough buyers to do that, then I'm going to start looking at a play on the stage 4 downtrend. But look, my Ichimoku cloud defined support, guys. So this is, until I'm through that, I'm not going to think about shorting Amazon. I could have a lot of these hammer candles there, these nails, keep going down, and then price action goes back up, and then I get whipsawed here because it's going down, but the price action closed above that weekly defined support. Could have a whole bunch of here. So you have to wait until really it goes down below Ichimoku cloud, guys. So right here, until we get down to this area here, I wouldn't think about considering. And it's the same thing as when the breakouts. Remember, I have embryonic breakouts. So you hit a low, the low at the beginning of a stage 2 advance. But the 30-week average is still going downwards. But after that, price action goes up. And then it consolidates above the 30-week average, making it inclining. And then, it breaks out again. So then after that, on the second and third breakout, that's when you enter, when the 30-week average is really inclining. Same thing for the decline. It's still inclining. So what we're going to see here is the original breakdown. After that, we're going to see some support, and then some sideways move, and then another breakdown. And that's the second breakdown. Just as stage 2 breakouts, for stage 4 breakdowns, you want 1, maybe 2. And usually with fear, that's pretty much enough. It drops faster than it goes up. And after that, once your time moves on, you're out of the cloud. There's no more support. It's just a vacuum and just fear. People start going crazy and sell, triggering sell stops and end of the world. And then you have an atomic bomb here. And then you hit stage 1. Cool, right? That's it for Amazon, guys. Comment, subscribe. Thanks. Ciao, guys.